Hey folks, Dan Frio here, the rate update. Here's our midday report. It's kind of humdrum, but I like it. We don't have many days where really nothing's going on with a lot of things, and the bond market's basically kind of stable, and we see mortgage rates the same. So I'm loving it. Okay, so let's get over to headline news right now. We have federal chair. This Bernanke used to be the federal. I wish these guys would just sit in the background, collect their checks, or do whatever they're doing at this point instead of coming out and saying, well, you know, they made mistakes and we made mistakes and they made mistakes and everything else. We know there's inflation, and the Federal Reserve is doing everything and anything they can to rebut that inflation. So we don't need Federal Reserve chairmen of the past coming in and telling them they're doing things wrong and everything else, because all it does is stir up the market. So it's good content for advertising, but it doesn't really give us much things. So let's go on to basically, like I said, there's no economic data for today. The rest of the week is packed solid. All right, so let's go over where the markets are right now. This is basically what I see in the background of my screens. So you don't see this in depth, but this is what I see, and I'm loving it. Okay, so we get up to the top here. We have the market summary right now. There's really nothing there except China and where they are with the COVID stuff. Down through here, the economic calendar, you can see there's basically nothing down in here. This is live charts. You're going to see these turning red and green and so forth. So every trade that basically takes place, you might see it reflect in here. Over through here, this is the mortgage-backed securities market trend, or the chart. Let's open it up so we can dig down a little deeper. But down through here, so I'm showing you the back end of my website, guys, not what I monitor on a daily basis so you can see that we have our thumb on the pulse. So if you really dive into the charts here, I think we might have seen a short-term bottom right through here. So this is giving me some good news. What is this? This is the MBS market, mortgage-backed securities market, the bond that trades on Wall Street. This is basically where we've been over the last 6 months, and you're seeing a crash here. What this represents is when this chart is going down, okay, it's representing what's going on to the price of a bond, okay, mortgage-backed security bond. When this price goes down, yields, in this case, because it's a mortgage rates go up. So you can see we had a lot of condensed information right through here, charts. This, to me, is showing good news. We've had complete overreactions, and I won't say overreactions, but getting back to normal. In this morning's, when I went over interest rates, some cells, the 15-year rate has doubled in the last 90 days, doubled, okay? So at some point, there's gotta be a little relief in the numbers. What they're gonna be, who knows, but this is only telling us, what's going on in the markets. So we watch this, we watch the economic calendars, we watch all the markets, the CNBC, Fox News, all the media outlets to get the true story. You can't just dive into one area and find that out. Mortgage rates right now, basically unchanged. We'll go across it. Mortgage News Daily just updated. So here's what we got. If you go across here, the biggest change was 0.01, nothing. Okay, so mortgage rates are staying steady. We still have the trend down here, which is positive, which is nothing but good news. So that's it. If you guys haven't got any questions, I'd love to answer it. But just to bring you guys up to speed, here's what we're doing. We have every Tuesday, we have Ask Your Home Buying Questions. It doesn't matter if you're asking home buying questions, a mortgage rate question, a credit question, reverse mortgages. I'm working on a reverse mortgage video right now because the phones are really getting heated up with reverse mortgages. I have some older videos that I have on that, but it's still drawing in a lot of consumers. And then don't forget our Thursday live sessions. For those that can't join us on Tuesdays, join us on Thursdays. This Thursday, we're going to talk about how much can you really afford? And we'll break down the numbers. And if you have any, if you want to join us then and just ask questions about your situation, love to answer it. So if you have any questions, please post them now. Otherwise, that is my midday report. But if you want any to dig in on anything, just ask it. If not, I'll give you about 10 seconds. But if you're watching the video, I see there's a decent amount of people watching the videos. Please give us a thumbs up. Show me a little love by just going down and clicking the button real quick. That helps the YouTube algorithms find us, or help more people find us. I do have a question. I have 3 mortgages at 3.125. So if I get another one at 5, it'll just average it. No. What's that? I think I know. No, Okay, I have 3 mortgages at 3.125. So if I get another mortgage at 5, I'll just average it. No, I would keep the 3.125 because each one stands alone. So it's like buying three, here, my analogy, and it just popped in my head. You buy 3 books. Well, if you put them together, you still have 3 books. It's not one novel. And I'm not slot kid. I'm not trying to be, make fun of you on that one. I'm just trying to make a point. I use analogies all the time. It drives my family nuts. But basically, you have 3 separate mortgages, and each one has a rate of 3.125. So if you don't have to do anything, don't do anything. Because that standalone rate is 3.125. There's no blended yield in there. Now, if you had one at 3 and one at 8, you have to do basically you have to figure out the balance of each one and how much that's leveraged in. So if you have 3%, 300,000 at 3% and 50,000 at 5, well, your rate's not 5 plus 3 equals 8 divided by 2 equals 4. The average isn't 4. It is 3.125. So you're good there. Let me ask, I think you have another question here. Sorry, I own 3 different homes. Well, if you have 3 homes and you have 3.125 on each home, keep it. Don't look to refinance unless you're looking to pull out money or do something. Keep the rate. Your today's rate, if you were looking to refinance, especially if they were non-owner occupied, you're probably looking at 6. So God bless you for being in the 3%. Hopefully my channel was a part of you finding that rate, but then I greatly appreciate your question here. So if anybody else has any questions here, Slot Kid, where are you? If you don't mind just giving me a blip saying, what part of the country are you in? I'd love to hear from all over the country. Let me know if you guys are looking for realtors all over the country. What I'd like to do is I would love to have like a Thursday or a Tuesday where I get 5, 6, 7, 8 realtors on here, and we just have one big real estate table talk. So if you're interested in that, please reach out to me. You can send me an email. And I did have somebody reach out to me the other day, and I apologize. I will get back to you today. I'm just playing catch up all day long for some reason. But my information is down below. I'm Dan at therateupdate.com. If you're a realtor, would love to be involved in a real estate chat group. We can even run it live, so those out there that are watching can ask any questions that they have. Let's see what you got. Not looking for a refinance, just saying if I bought another one in the 5s or 6s, I'm okay with it. Yeah. I mean, it's what the rates are today. So yeah, if you're looking to buy, it's all you're blending downward. It's a good way to look at it, your whole portfolio. But I get what you're saying. So what are you on the real estate? Man, you are all over the place. I'd love to talk to you about all those areas and why you got them in all those areas. We got Las Vegas, Palm Springs, and New Orleans. Which one's working out best for you? Have you had them a long time and you've seen nice appreciation on things? I had some rental properties. I basically depleted all those or sold all those out. My last one was about 3 years ago, and I'm not a landlord person. I have a property in Florida that I go in as much as I can, and then I also live in Illinois. So I thank you for the posts. If you guys got anything else, let me know. Otherwise, I got a whole slew of people I got to get back to because I got people asking for rate quotes, locking them in, helping them with realtors, and so much. But I just wanted to post this up here. If you would, please don't miss out on these events that we have live, because I'm here to answer any all the questions you got. Because the goal here is to educate and inform you guys everything real estate, especially the finance part. So God bless, guys. Thanks for watching. Thanks for joining me briefly, and I will see you tomorrow. Take care.